Ever feel like missing out on the biggest opportunities in trading? Like there is a hidden secret to becoming successful at it, but you just somehow you can't seem to figure it out. Well, I'm here today to tell you that success doesn't have to be a mystery. That's why in this video I'll talk about one of the most important and often overlooked, I think, aspect of successful trading, which is recognizing and taking advantage of that one high probability trade that may appear during any market session. Hey everyone, welcome to my channel. Now it's a well-known fact that within a trading session there are numerous opportunities. However, and as you already know, not all of these opportunities equate or translate to high probability trades where the odds are significantly tilted in our favor. The real secret of successful trading lies, in my humble opinion, in identifying and seizing these high quality trade setups rather than getting distracted by every potential trade that might come our way. Basically, the idea is that by carefully selecting high probability trades, you as a trader can increase your chances of success, obviously over time. And at the same time, here it's important to note that and to understand that trading is not about quantity, but rather quality. The law of large number, which, as we already know, states that over a large number of trades, the outcome will align with the probabilities, reinforces the significance of focusing on high probability setups. So instead of trying to grab every opportunity that presents itself, you should sharpen your skills in identifying those rare high probability trades that offer the biggest potential for profit. By doing so, you can once again take advantage of the law of large numbers, tilting the scales in your favor, boosting this way your account with greater profits. It's a well-known fact that the world of day trading can be a roller coaster ride. There are highs, lows, twists and turns, and it's easy to get caught up in the thrill of the chase, especially if you are a beginner. But is more always better? This question leads us to another essential aspect that often gets overlooked, and that is, in my view, market manipulation. And separately here, for those new to trading, market manipulation is a phenomenon that occurs when individuals or entities with significant resources influence the price or volume of a security for their own benefit. These manipulators, often referred to as smart money, take advantage of the excitement and eagerness of retail traders to chase or push prices in a certain direction, creating false signals and enticing traders to take position that may not be in their best interest. As I have often mentioned in this channel's videos, it's important for traders to understand that these manipulative market forces aren't influenced randomly. They follow a clear rule-based framework that aims to deplete you of your liquidity. Now, understanding this concept, I think, can fundamentally shape your understanding of market behavior. Now, circling back to our initial topic, is making multiple trades the secret to success, or could there be a different approach that might yield better results? Well, let's briefly break down here the technical and emotional rationale behind this predicament. On the technical side, each trade carries a risk, and by limiting ourselves to one high probability trade, we focus our resources and minimize our exposure. We're not just throwing darts at this point at a board or hoping for the best. We're actually carefully aiming for that bullseye. Emotionally, it's a well-known fact that trading can be stressful. It's a game of patience, discipline, and mental fortitude. The more trades we make, the more emotional investment we have in the market. By focusing on one high probability or high quality trade setup, or two if the right opportunities present themselves, we can manage our emotions better, avoid overtrading, and more importantly, I think, maintain a clear, focused mindset. This brings us to a crucial approach that that many of Wall Street's top earners employ, which is focusing on that one high probability trade. So let's talk about why taking such trades might just be the best course of action in trading. And by the way, guys, I'm also going to go over some charts later on to illustrate the concept and clarify, if you will, its meaning. Okay, so with more than 20 years of trading experience, I've come to an obvious conclusion. The market is clearly not designed to frequently offer a plethora of high probability trades within a single day. Yes, it does present a number of trade opportunities daily. However, it's essential to distinguish between quantity and quality here. Obviously, the market is a complex entity influenced by a multitude of factors such as economic indicators, corporate earnings reports, geopolitical events, and trader sentiment. These factors continuously interact and shift, causing prices to fluctuate and creating numerous potential entry points for traders. This is where the quantity comes in. However, not all these potential trades are high probability, where the odds are significantly in our favor. If that was the case, logically, wouldn't everyone quit their day jobs and become traders? There's more to this than clearly meets the eye. Remember, guys, trading, it's not a passive income source. It's an active, I should say, pursuit that can be as demanding, if not more so, as a high-pressure full-time job. Quality trade setups, on the other hand, require a confluence of favorable factors and indicators. They might involve a securities price bouncing off a key support level, a significant break of market structure or market formation, rebalancing of a key imbalance zone, or a bullish trend confirmed by multiple technical indicators. Keep in mind, high probability trades are like needles in the haystack of daily market activity. Identifying these quality opportunities requires solid analytical skills and obviously patience. It's about, I think, sifting through the noise of the market to find those few golden opportunities that align with your trading strategy and obviously risk tolerance. So the logic behind the idea here is that while the market may offer a multitude of trades each day, more isn't always better. It's the quality of the trades, not their quantity, that can make the difference between a growing account and a bleeding account in the long term. That's why I think that focusing on finding and executing high probability trades, even if they are fewer, could be a more effective approach to raking in green. Now, let me clarify something here about this trading approach. It doesn't necessarily mean I limit myself to just one trade per day. As I've previously indicated, there are days where I may execute two or more trades provided the right opportunities arise. However, my primary focus is not to overtrade, but rather to, again, identify that one high probability trade. And by the way, let me talk a bit here about the practice of overtrading, which I definitely see it as a sign of amateurish behavior for several reasons. Now, when I first started as a day trader, I fell into the trap of overtrading big time. I would constantly monitor the markets and enter multiple trades in a day, hoping to capitalize on every opportunity. After all, I thought, as idiotic a concept obviously as it was, the more trades I make, the more chances of making profits, right? Well, obviously it was a stupid idea. And clearly I was clueless to what I was doing, since this newbie trading mentality only led to frustration, increased exposure to risk, and eventually losses. I was spread too thin, constantly switching between different charts and losing focus. When you have multiple trades open, it's easy to become emotional and make impulsive decisions based on fear or greed. It became clear to me after a profusely bleeding account that overtrading was leading me to emotional trading, which, needless to say, is a failing strategy. So my point is, no matter how you slice it, and this is just my humble opinion here, but I genuinely believe that overtrading is not the way to go. In fact, the practice often signifies a lack of clear strategy and understanding of the market. Unless you are a Momo player or trader playing news, constantly jumping in and out of trades can be detrimental to your overall success. Speaking of success, it goes without saying that successful trading involves careful analysis and thoughtful decision making. When a trader is continuously buying and selling, it's often an indication that they are reacting impulsively to market fluctuations rather than following a well thought out plan. In contrast, seasoned traders understand that patience and unemotional discipline are key. Again, they know that it's not about the quantity of trades, but the quality. They wait for high probability opportunities and aren't afraid to sit on the sidelines when those opportunities aren't present. This measured approach helps them control costs and exposure to risk and ultimately achieve sustainable success in trading. All right, let's now go to the charts to spot some instances of high probability trades. In this first scenario, we have an attractive setup materializing. It begins with a pronounced upward trajectory following an accumulation segment at a lower point, which, as you can see from the chart, gradually morphs into a clear stop hunt pattern, quite intriguing, I must say. Now, as the market reaches a provisional peak up here, a noticeable shift towards the supply side emerges. This break below this support level simultaneously acting as a base for this entire liquidity grabbing area, coupled with a break in market formation, suggests, in my opinion, at an impending reversal. Given these elements, I'm led to believe that when the price is pulled into this order block region, it could present the perfect opportunity to establish a short position. That said, if you are more on the conservative side and prefer to play it super safe, I suggest waiting patiently for the price to reprint below support before initiating a short. Obviously, stop loss should be placed up here. So as demonstrated in this chart, within this high probability setup, we identified a solid, high quality scalping opportunity. These instances, I think, highlight the importance of careful price action analysis. All right, let's go to another setup example. So in this chart, we witness the market in an upward swing for a period, only to see it tumble abruptly. The market then breaks structure, a dynamic that leads to a short phase of range bound activity. This is followed by yet another drop, then some more sideways action before the price surges inside this large imbalance zone, which is an area where supply and demand forces are out of sync, a zone that often acts as a magnet for prices. This surge toward market equilibrium signals a potential turning point in the market's direction. In my view, this looks like a solid opportunity to venture into the short side of the market. As evident from this hypothetical entry point, once the market gets balanced, it begins to puke lower. Here is another setup that offers, I think, a high probability of success. The action begins with a bit of volatility, followed by a nice upward push after the market structure breaks. This is subsequently followed by a complete reversal in price, which then navigates its way into the zone of this order block, which clearly indicates our point of entry for a long position. Again, guys, the essence of the high probability strategy is to buy when the market hits key levels and to secure profits when the market swings in your favor. In summary, limiting yourself to one high quality setup per day offers several advantages, and those include increased focus, reduced emotional pressure, and obviously quality over quantity. I'd like to also point out that taking only high probability trades has been a game changer in my trading journey. This approach has allowed me to again focus on quality and avoid the pitfalls of overtrading. That said, though, I totally understand it may not be the right strategy for everyone, but I still highly recommend giving it a try as a technique that can bring, in my view, consistency and discipline to your trading routine. And by the way, guys, do not miss out on watching this next video as it could help you better understand how quality setups truly work. Alright gang, thanks for watching, see you in the next one.